Recording in progress.
Our Quarter 2 2026 earnings call. First, we apologize for the delayed publication of our Quarter 2 2026 results. The additional time was required to conduct a limited review of the financial statements in preparation for potential corporate actions. The company has confirmed its participation in the bidding process for AkzoNobel, with a particular focus on its Indonesian business. Should there be any material developments requiring disclosure, we will communicate them to the market in accordance with the applicable laws and regulations. For your information, we uploaded the presentation materials to our website yesterday. Please note that all comparisons are to the same period of 2025 unless otherwise stated. The plan for today is to start with a quick presentation, followed by a 1-hour Q&A session. If you have any questions during the presentation, please use the Q&A chat box, and we will answer them during the Q&A session. For those who cannot join us now, the webcast of this event will be uploaded to our website not later than tomorrow. Thank you again for being here today. Allow me to start by introducing myself. My name is Andreas Timothy Hadikrisno. I'm the head of investor relations at Avia and will be moderating the earnings call today. We are joined today by 3 other presenters, starting with Mr. Ruslan Tanoko, the Vice President Director of our company, followed by Mr. Robert Tanoko, the Operations and Development Director, and finally, Mr. Kurnia Hadi, the Finance Director. Avian Brands recorded a total revenue of $126 million, delivering a consolidated gross margin of 45.9%, an EBITDA margin of 27.2%, and a net profit margin of 19.5%. These results reflect the resilience of our unique business model and the disciplined execution of our strategy despite a challenging operating environment. Avian Brands continue to gain market share while ensuring the growth and sustainability remain balanced priorities. Our ultimate objective is to create long-term value for all stakeholders through sustainable and profitable growth. This page summarizes Avian Brands' Quarter 2 2026 performance compared to the same period last year. The company delivered double-digit growth in a quarter marked by heightened global uncertainty and persistent demand softness across most end markets. Our growth investments continue to yield tangible results, with strong double-digit sales recorded in both the architectural solutions and trading goods segments. However, raw material price volatility and movements in the US dollar against IDR exchange rate remain key challenges for the industry. To offset these pressures, Avian Brands implemented 2 price increases during the quarter. The first price increase was implemented in April 2026, ranging from 7 to 10%, followed by an additional increase of around 5 to 8% in May across the wall, wood and metal, waterproofing, and wood care products. During quarter two, Avian Brands strengthened our product portfolio by introducing two new products, as presented in this slide. These launches demonstrate our continued commitment to innovation and our ability to address evolving customer needs. With the support of our extensive distribution network and integrated sales systems, we are able to bring new products to market more effectively and accelerate penetration across key segments. Product innovation continues to be a key driver in our growth strategy. Through these launches, Avian Brands aim to capture opportunities in high-potential segments, strengthen its market position, and offer customers a more complete range of solutions across different application and price points. Avian Brands further strengthened its distribution network with the opening of one wholly owned distribution center during the quarter. This expansion reinforces our logistics infrastructure and supports faster, more reliable product delivery across our nationwide network. Our distribution capability remains an important differentiator for Avian Brands, enabling us to maintain strong device services level while supporting deeper market penetration. Beyond this, our distribution network also acts as a defensive moat against intensifying competition and ongoing market challenges. By maintaining strong control over our logistics and customer reach, we are better positioned to accelerate market share gains and respond quickly to changing demand conditions. Despite ongoing market headwinds, Avian Brands maintained strong growth momentum. During the quarter, total sales rose by 19.7%, reaching 2.2 trillion rupiah. This brought consolidated sales for the first half to 4.59 trillion rupiah, representing growth of 18.2%. Customer engagement continued to expand, with transactions recorded across more than 57,700 retail outlets, marking an increase of over 1,600 customers. Against a softer market demand and ongoing industry challenges, Avian Brands remains focused on being a reliable partner by ensuring product availability, consistent service quality, and relevant solutions across price segments. This customer-centric approach continues to strengthen our competitive position and support sustainable growth in the long term. I will now pass to Pak Hadi to continue the presentation.
Thank you, Pak Andreas, and good afternoon, everyone. The sales mix shown on this slide reflects the strength of Avian Brands' business model. Architecture solutions continue to be the main pillar of our revenue, contributing 79% of total sales. Within the segment, the wall, wood and metal, and waterproofing categories remain the strongest performers, each recording robust double-digit growth during the quarter. Traditional retail outlets remain the largest customer group, accounting for 92.2% of total revenue. This figure underlines the strength of our retailer network and our deep penetration in the traditional building material channel. Meanwhile, Our wholly owned distribution center accounted for around 90.8% of total revenue, reinforcing their role as the primary channel, supporting our nationwide sales execution, service reliability, and customer reach. Avian Brands recorded consolidated gross profit of 1 trillion rupiah in Q2, translating to a gross margin of 45.9%. Despite ongoing raw material cost pressure, Avian Brands continue to demonstrate margin resilience through strategic pricing pass-through and continuous optimization initiative. For the first half of the year, consolidated gross profit reached 2 trillion rupiah, with gross margin remaining solid at 45.4%. In Q2, Avian Brands recorded consolidated EBITDA of 606 billion rupiah, representing an EBITDA margin of 27.2%. For the first half, consolidated EBITDA stood at 1.2 trillion rupiah, with an EBITDA margin of 27.9%. Moving on to the bottom line, Avian Brands reported net profit of 435 billion rupiah in Q2, translating to a net profit margin of 19.5%. For the first half, net profit reached 938 billion rupiah, reflecting a solid net profit margin of 20.4%. Despite a more challenging cost environment, the company maintained stable profitability. First half margins were broadly in line with the company's full year 2025 performance, underscoring the resilience of its margin profile. This was supported by strategic initiatives, including pricing pass-through mechanism, further reinforced by our in-house raw material capabilities, and continuous cost optimization effort, which together help mitigate input cost fluctuation and preserve margin stability. The Architecture Solutions segment continued its growth trajectory in the second quarter, marking its 8th consecutive quarter of positive performance despite a challenging economic backdrop. In Q2, the segment delivered double-digit sales growth of 22.4%, supported by a 4% increase in volume. For the first half, segment sales reached 3.6 trillion rupiah, representing 18.8% increase. Over the same period, volume grew by 8.6%. Within this segment, the wall maintained its strong performance, delivering double-digit growth during the quarter. Avian Brands continue to gain market share and strengthen its position in this segment. On the next slide, the Architecture Solutions segment serves over 53,500 transacting retail outlets in the first half, an increase of more than 1,600 customers. Beyond expanding its customer base, Avian Brands remain focused on strengthening the quality of its partnership by providing high-quality service, consistent product availability, and practical support to help customers grow their business. We will continue to support our existing and new customers by being the most reliable and consistent business partner in our industry. In Q2, the trading goods segment achieved 10.9% growth. It was the 10th straight quarter of double-digit growth in this business. In the first half, sales were up by 15.8%, reaching 957 billion rupiah. In the first half, the trading goods segment recorded more than 48,400 transacting retail outlets, an increase of over 2,500 outlets, and equivalent to 84% of total consolidated customers. The segment continues to create strong commercial synergy by complementing Avian brand's core product offering and increasing the value delivered to retail partners. This page provides a breakdown of gross profit performance by segment. In Q2, the Architecture Solutions segment recorded gross profit of 904 billion rupiah, with a gross margin of 52%. For the first half, gross profit reached 1.8 trillion rupiah, translating to a gross margin of 51.6%. Meanwhile, the Trading Goods segment generated gross profit of 121 billion rupiah in Q2, representing a gross margin of 24.5%. For the first half, gross profit stood at 208 billion rupiah, with a gross margin of 21.8%. The increase in gross margin for the Trading Goods segment in Q2 was driven by two price adjustments implemented in the pipe category in April and May. The segment temporarily benefited from the lagging effect of inventory purchase before the price increase. This effect is expected to normalize as we enter the second half of the year. I will now pass to Pak Robert to continue the presentation.
Thank you, Pak Adi. Good afternoon, everyone. Turning to our cost structure, Avian Brands maintain a stable operating expense profile during the first half. General and administrative expenses remain at around 3% of total sales, while sales and marketing expenses accounted for 17.2%, reflecting continued discipline in managing operating costs while supporting business growth. At the same time, higher raw material costs, compounded by the recent depreciation of Indonesian rupiah against the US dollar, have placed additional pressure on input costs. Historically, Avian Brands has managed raw materials volatility effectively through a combination of disciplined procurement strategies, operational efficiencies, and selective pricing adjustment. We will continue to closely monitor market developments and adapt our operational and commercial strategies as needed. Importantly, our long-standing focus on building strong relationships with strategic suppliers remain a key competitive advantage. We believe these partnerships will continue to support supply stability, cost management, and overall business resilience going forward. Moving to our capital management overview, Avian Brands continued to maintain disciplined working capital management in the first half, with working capital accounted for around 27% of total sales. Capital expenditure for the first half amounted to 232 billion rupiah, equivalent to around 5% of sales, and with routine capital expenditure accounting for approximately 2.6%. Investment priorities remain focused on initiatives that support the company's long-term growth, including the continued rollout of tinting machines across retail outlets. Supported by a strong free cash flow generation, Avian Brands remain committed to its dividend policy of distributing at least 50% of total net profit to shareholders. With a healthy balance sheet and strong liquidity position, Avian Brands has the financial flexibility to pursue strategic acquisitions opportunities that can create long-term value. This reflects the company's ongoing commitment to maintaining a balanced capital allocation approach, supporting the future growth while consistently delivering attractive shareholder returns. If we turn our attention to the figure on the far right, you will see that there is a slight decline in our on-time collection of account receivables. This provides another indication of a challenging operating environment. However, we take pride in the fact that retail outlets continue to place Avian Brands at the top of their payment priorities, reflecting the strength of our customer relationships and our position as a trusted partner for them. The company increased its full year 2026 value guidance to between 10 to 14%, while maintaining volume guidance at the same level. This adjustment primarily reflects the increase in average selling prices, which grew by 9.4% in the first half, while also taking into account the prevailing uncertainties in the macroeconomic environment and their potential impact on consumer purchasing power. We will continue to monitor market conditions carefully and maintain a prudent and balanced approach while remaining focused on the factors within our control. Regardless of the market condition, Avian Brands remain well positioned to continue gaining market share. Avian Brands is proud to be recognized at the top CSR 2026 awards as the only paint and coatings company in Indonesia to receive this recognition for our outstanding CSR performance. The company also successfully maintained its recognition as a constituent of SE Russell ESG rating in 2026, further strengthened by a significant improvement in ESG performance, reaching a percentile rank of 88. This position Avian Brands among the top 12% of global companies in the building materials and fixtures subsectors, with ESG performance significantly exceeding both subsector and industry averages. That concludes our Q2 2026 presentation. Thank you very much for joining today's earnings call. I will now pass to Andreas to moderate the Q&A session.
Thank you, Pak Robert. We can now proceed with the Q&A session, which will last for about 1 hour. So the first question coming from Yuan Long. Congrats, management team, jumping the gun to ask my questions. Number 1, outlook on volume growth for the rest of the year, given the macro outlook looks increasingly challenging. Number 2, M&A, whatever you can share, lots of noise upon AXO assets. Number 3, process on our current strategies, notably salespeople incentive adjustments. How is it going so far?
Good afternoon, everyone. Hey, Yuan Long, good to hear from you. The volume growth for the rest of the year is not going to be up a whole lot. So we're sticking to our original guidance. As you can imagine, with prices going up in record highs in this year, we're experiencing a situation quite similar to the Asia financial crisis. So when you enter a building material shops, every single object that you see have gone up in double digits. So this is certainly unprecedented in the past 26 years that I've been working for the family. With that in mind, obviously, it is logical to conclude that all retailers, building material retailers, are sitting on record high inventory levels. Now, when you combine this with the ASP hikes that has happened, as well as the weakening purchasing power by consumers, it's not looking all that great for the second half of this year. So we've heard that some retailers are already saying that, okay, well, I have a lot of products, but consumer demands are weak. I have a lot of products, but consumers are not buying the expensive products. In fact, they are down trading. So these are all comments where I hear about them, almost on a daily basis. However, we remain committed to achieving our forecast, and because of our strength, we know that we are in the best position to continue to gain market share, regardless of how the Indonesian consumers are behaving. Number 2, on the M&A, yes, there's certainly been a lot of noise on the AXO assets. So the way we see it is that we have certainly participated in the process. The deadline, I think everybody knows, is going to be on September 4th. Which is not very long from now, about 2 weeks or so. So AXO assets in Indonesia remain to be very appealing. And I think, outside of Indonesia, there are plenty of strategics as well as sponsors who are going to participate in the deal. The way we see it is that the synergies between Avian Brands and AXO in Indonesia is definitely unmatched by any other competitor. Given the strength of our distribution network and the number of customers that we have, and where AXO has been positioned in the past decade in Indonesia, so we know that the synergies that we will create from the combination of the two entities is going to be very significant. I think as far as what I can share is at that level only for now, Yan Long. On the third, the progress of current strategies, notably salespeople adjustment incentives. We pay attention closely to this because our salespeople is critical in driving sales for the company. We now have about 1,600 or so salespeople, and then like a few hundred supervisors, and many 150 or so DC managers, and maybe about 1,500 or so sales promotion girls/boys. So trying to tweak the incentives so that these people can be incentivized to work even harder and trying to sell products even more is something that we do almost on a daily basis. I look at the numbers and I need to make a decision whether it's important to adjust them, whether it's too easy or whether it's too difficult. And we try to strike a good balance so that, they can achieve their targets and their commissions. But at the same time, the company is also doing well. So it's definitely a win-win solution that we pay attention closely to. Thank you, Yuan Long.
Thank you, Pak. Next question coming from Robin Sutanto. So, hi team, congrats on strong second quarter of this year. May I ask, number one, how has sales volume been in July and August so far? And is there any sense of customers' inventory levels? Number two, how are costs looking in the second semester 2026? And should we expect lower margins? Number three, are there performance estimates of what post-AXO deal revenue and EBITDA bump can be like? Thank you.
Yeah, let me answer the first one, Robin. As I explained earlier, I believe that all of our building material customers are sitting on record high inventory levels, which basically means that in order for us to meet our guidance, in order for us to continue with our double-digit growth, we have to get our sales from our competitors. And that's exactly the kind of mindset that we've been putting into our sales team. Because at the end of the day, when our market share is at around 26%, there are still 74% of market out there that we can grab. So even if the entire paint segment is shrinking, there should be no reason for us to not grow because the market out there is still very big. That's how we see it. In terms of costs in the second half, maybe I'll throw it to Hadi. You can answer that.
Sure, Pak. Hi, Robin. Hi, Pak Robin. Thank you for your question. I think for the margin going forward, we remain cautiously optimistic about our margin outlook. There are certainly some potential pressure from raw material costs and also FX, particularly if geopolitical development lead to higher commodity price or further IDR depreciation. That said, we have several levers to mitigate this pressure. Pricing is one of them. Historically, our price adjustment have been well accepted by market. Spain represents only a relatively small portion of the overall renovation costs, and repainting is also an infrequent purchase. We have also demonstrated this pricing ability in the current environment, with our margin remaining relatively stable through up to June despite cost pressure. So going forward, we will continue to closely monitor raw material and FX development while maintaining price discipline, optimizing procurement and inventory, and also driving further operational efficiencies. So while we remain vigilant in potential cost volatility, we believe that our margin profile remain resilient, and we are cautiously optimistic about maintaining healthy margin going forward. On the next question about is there any pro forma estimate of what post-AXO deal? I think in this stage, We would prefer not to put a specific number on the synergy before completing a more detailed assessment out of it. But we believe that the combination provide both cost and revenue synergy opportunities, with distribution and operational efficiencies being the most tangible area. Thank you, Pak Robin.
Let me add one more thing. I forgot to respond to the volume in July and August. In July and August, up till now, Robin, we're still tracking with our revised guidance in the double digits. So I think is what we're seeing. That being said, we continue to work very hard in trying to add and push more products into our customers. I think any developments on the R&D side needs to be accompanied with our ability to actually push these products into the market. Otherwise, the R&D departments spend a lot of money and effort and time, but the products won't get into the hands of our consumers. So that's something that we do not want to happen. Thank you.
Thank you, Pak. So next question coming from Axel Bramantio. There are 4 questions. Question number 1, with the merger process between Axalta and AkzoNobel, will this disrupt AkzoNobel Indonesia's business acquisition process? Number 2, besides AkzoNobel Indonesia business, are there any other businesses in Avian's acquisition pipeline? Number 3, Avian consistently opens new branches exponentially. Is there still room to open more new branches without cannibalization between branches? Number 4, due to economic slowdown, many stores are currently experiencing excess inventory. What is Avian's marketing strategy? Is it still focused on the trade promotions, or is it more focused on above-the-line marketing to help customers sell out?
Okay, let me answer the first question. The merger between Axalta and AkzoNobel will not disrupt their sale of the Indonesia business as well as the remaining of Southeast Asia. So it's going according to plan. There's no disruption. The second thing is that any other businesses in our acquisition pipeline? No, not really. Look, I think if you can see, we've been very selective with regards to what company would fit within our ecosystem that we can acquire. So, other than Dexton, which we did last year, this AkzoNobel will be our biggest acquisition and most important one yet. And as Robin asked earlier, I think we're looking at the numbers very hard to see what kind of synergies, whether that's on the top line or on the cost side, and what kind of EBITDA improvements that the company will get post-merger. On the third one, with us regarding opening new branches or opening new DCs, it's a good question. Is there still any more room to open without cannibalization? The short answer, we are not worried about the effect of cannibalization because we pay very close attention to important metrics before deciding to open one more, Axel. So I won't be able to share the total number that we have in our pipeline, but we will continue to add more distribution centers next year and the year after. And the logic behind it is that, look, it all goes back to our focus in providing the best service quality. We want it to be as close as possible to our customers so that when they are incentivized to try products that they've never sold before, they can just pick up the phone or call our team or send us a WhatsApp, and the products will be there in the next day. So I think that's what we're aiming to do. Given the fact that Indonesia is so large, we need to have strategic locations in different cities in order to deliver this excellent service qualities. And because of that, we will continue to add more DCs. But at the same time, we make sure that cannibalization does not happen, because achieving 12-month EBITDA positive in each new DC is still a focus from the company's point of view. Thank you. And the last question. economic slowdown, experiencing excess inventory, what's our strategy? Is it more trade promotions or above the line marketing? One interesting thing, Axel, if you look at the report of the television spending by Nielsen, you'll see that that number is actually down to almost zero this year, meaning that not a single paint company is actually advertising on television. Digital advertising is difficult to measure, so nobody has that number published yet. However, we are selectively spending our dollar on the digital advertising on selective channels where we think there's a lot of synergy to our targeted consumers. But when the inventories at the store levels are high, we push products that they haven't sold yet, because for those products, they don't have any inventory, right? So we believe that the ability from the R&D department to continue to introduce new products where the consumers need is going to be one of the driving force for our continued market share gain. Thank you, Axel.
Thank you, Pak, for the explanation. Next question coming from Joseph Eugene Lumoindo. Hi, management. Thank you for the presentation. Few questions from my side. Number one, gross margin on second quarter 2026 GPM was resilient, partly supported by the use of older, lower cost inventory. How much of this buffer remains in August, and what should we expect for the GPM in the third quarter 2026 and the second semester 2026, given continued solvent and resin cost pressure? Number two, volume and pricing. With recent volume weakness in second quarter, how much consumer downtrading do you expect in the second semester 2026? And do you still see room for another price hike? Number three, competition. How do you see competition evolving in the second semester 2026? And does management plan to push further into the premium segment? Number four, M&A. In terms of potential deal, understand that it is still early, but could management give some color on the valuation or multiple being discussed, and how Avia is thinking about funding the deal? Also, what is AkzoNobel estimated market share in Indonesia? And would the transaction put any pressure on dividend or buyback capacity going forward?
I think for the first question, Hadi can answer.
Yeah, yes, Pak. Thank you, Pak Joseph, for your question. I think regarding the margin, we also have a track record of successfully passing through cost increase where necessary, Pak. So while raw material price and FX remain an important variable, I think we believe that we have sufficient lever to mitigate that impact on margin.
The second one, when it comes to volume and pricing, how much you still see room for another price hike, or do we see how much consumer downtrading do you expect? Look, I think, well, because we also carry trading goods, which are mainly PVC pipes. Within that segment alone, we already see downtrading. So in the PVC pipe segment, we have a premium product and a mass market product. So now the mass market is definitely gaining faster, growing faster than the premium segment within the PVC pipe. So I think when it comes to paint, I think a similar trend is likely to happen. But where we are as a company, we are, again, very well positioned because of our product portfolio, as you can see from this page, is basically from premium all the way to economics. So we have products positioned at all levels of pricing. And keep in mind that our margin difference between, let's say, a price point 3 to a price point 2 is maybe 1 or 2%. So it's very low gross margin difference. Do I still see room for another price hike? I think we have to keep in mind how the input costs are. And at this point in time, they're somewhat stable. again, as Hadi mentioned, unless other geopolitical tension continue to rise, if more bombings is happening in Iran or whatever, then, these are factors where we cannot predict. But if things are staying as they are now, we do not anticipate another price hike to take place for the remaining of the year. When it comes to competition, how do we see competition evolving in the second half 2026? Do we plan to push further into the premium segment? The answer is yes. We plan to push not only in the premium segment, but across all segments, to be honest, because at all the different levels of price structure, we are encountering different competitors, right? On the premium, we will see, Akzo Nobel or Dulux, and in the mass market, we'll probably see a different competitor. And on the mass market or economics, we'll see a different competitor. So we're trying to basically push all segments that we have. And again, this is where having the largest number of distribution network as well as the largest number of customer base becomes very important in a country like Indonesia. On the last one, M&A deals. I think Hadi can add to that.
Yeah, sure, Pak. I think on the valuation, we are currently not in position to comment on the valuation, given the ongoing discussion and confidentiality consideration, Pak. And then in the financing, I think we currently expect to finance the acquisition through a combination of internal cash and bank financing. Given our strong balance sheet and cash generation, we believe we have sufficient capacity to take a prudent level of debt while continuing to support our regular capital allocation. So we believe that this acquisition is very important for our long-term growth. So thank you.
Thank you, Pak. So next question coming from Robin again. Thank you for the input. May I ask further, with 3% increase in market share in the last 2 years, are there any key brands which have exited the market? What is the view on the market share trend of the other major competitors?
Yeah, thank you again, Robin. We believe that the competition in Indonesia will continue to be intense, right? And lately, there's been more competition coming from China. Apparently, there was a deal in one of the local company that was acquired by a Chinese company just a few weeks ago. But rumor has it that the deal basically did not go through. Not sure whether it's true or not. But I think this more and more competition coming into Indonesia, especially from the Chinese players, really signify how Indonesia continues to be interesting despite what's happening in the country at this point in time, whether that's on weak consuming power or some regulators' uncertainties. Indonesia will continue to be a country of interest in the long term. Now, when we look at the existing competitors, other than Asian Paints of India, which had basically mentioned that they decided to exit the Indonesian market, we haven't heard of any other multinationals that have decided to do so. That being said, many of our competitors basically have not done anything. So, we actually, beyond the other 2 or 3 players, we don't even look at other competitors because I think too many of them are in the position of waiting and seeing. I don't think that's the best position to be, because if you're just being defensive, you're losing market shares. But that's a fact of life. So many of our competitors are just in defensive positions and they haven't done anything at all. They haven't done any product launches. They haven't done anything creative to support so that they can gain market shares. And because of that, we believe that, in times of turbulence, this is the perfect time for us to continue to gain market shares. Thank you, Robin.
Thank you, Pak. Next question coming from Dava Iksandi. Hi, Avian team. Thank you for taking the time to answer our questions. Congratulations on Avian's strong performance and continued growth. We have a few questions regarding the recent business developments and outlook. Number one, could you share some color on how customer activity has been developing so far in 2026? Number two, what have been the main drivers behind the growth so far for this year? Number three, could you share some insights on Dexton's performance since Avian increased its ownership and began expanding its distribution?
Yeah, I think the first question is regarding customer activity. I just answered with Robin's question. Number two, the driver for the growth so far. Look, I think we stopped waiting for the market to recover and decided to continue to be aggressive by getting shares from competitors. I think if I were to sum up in one word, in one sentence, that's basically what I said. So we don't wait for the economy to recover, but we take market shares from others by launching selective products where the market needs. For instance, we just launched one product a few quarters ago. It's called Avitex Texture, right? Honestly, I didn't think the market for texture paint would be that big. But just 2 days or 3 days ago, Depo Bangunan, a modern trade outlet, opened its latest store in Palembang. So obviously, my staff would send me a lot of pictures of our displays, our products. I was quite shocked to see that there are probably more than 60 cans of the Avitex Texture products being displayed. That many number of products signify that they are on demand. So this is just one example of how important the R&D department is, which will contribute to the continuous growth of the company. On the third one, on the Dexton, on the second one, I just also want to add that when it comes to execution, I think the incentives that we've been giving to them and is critically important because, as consumers' demand continue to be weak, right? We need to also incentivize our people, giving them coaching and educating them how to actually gain more market shares. And we've conducted coaching for maybe more than a year now, and basically telling them that, okay, how do you offer this product? How do you offer that product? And so on. And I think we're seeing the results now. Last one about Dexton. So Dexton basically took about 1 year. We signed the agreement, I think, March or April last year. We started the distribution in May. So now we're maybe about 15 months, 16 months in. And the growth for Dexton has actually been very, very satisfying. I still aim higher, but so far we've delivered more than 50% growth to the business since we basically become an important distributor of them. And Dexton is going to continue to develop more and more products that we think the market is needed. And so it's definitely an acquisition that has been very much aligned with the way we want to do our M&A. Thank you.
Thank you, Pak. The next question coming from David Gan. Congratulations once again on the great results. Some question I have, there are 3. Number 1, have the other player matched both price hikes? Number 2, do you think market share gain besides disruption is largely due to the down trading and could reverse when spending environment improves? Number 3, has the container condition normalized already?
So other players match both price hikes. So the top 5 players have definitely matched both price hikes. But many of our smaller competitors only basically did one price hike. Again, I think this is a testament to that they are very reluctant or they're very worried that increasing prices will in fact worsen their condition and basically things will deteriorate even faster for them. So that's basically what we've seen so far. Is down trading, could it reverse when spending environment improves? Yes, I believe so. Because, I think when it comes to paint, right, Hadi mentioned earlier, if you think about your paint spending as well as the labor to paint your house, it's a very small fraction when compared to the entire value of your house. And therefore, for homeowners, they don't really mind spending a bit more because at the end of the day, it's a very small cost, and it's something that you don't do on a yearly basis. So I think down trading is happening right now, although we're managing it very well. But when the market recovers, it will go back up again, and the consumers will use better products that they've used before, and yeah, the situation will definitely reverse. And last one, has container conditions normalized already? I'm assuming that when you say container, we're talking about the plastic packaging that houses the paints. If that's the case, then the answer is yes, it has normalized. So what had happened in the month of April and May was that there were severe shortages of plastic pallets to make plastic packaging. So this happened across Indonesia. But because we are vertically integrated as a company, we definitely have more buffer as compared to any of our competitors. So with that in mind, the issues that we had with paint containers packaging was definitely lesser when compared to other competitors. Thank you, David.
Thank you, Pak. Next question coming from Gerald Hugo. Hi team, congratulations for the solid results. Want to understand more on, number one, given the high inventory level on customers, what will be the company's action in helping your customer to increase their sales, therefore reviewing their inventory again? Number two, what are the signposts or milestone for the AXO M&A and the timeline? Number three, will this be a direct acquisition or what kind of structure and ownership should be expect? Number four, what was AkzoNobel market share and revenue trend in the past 3 years?
Yeah, so on the first one, on the high inventory level, what are we doing to help the customer to increase sales and therefore refueling their inventory again? This is not easy to do, Gerald, because at the end of the day, consumers, if the end consumers do not walk into the paint shop or the building material shops, then there's really limited on what we are able to do as a principal or as a supplier. That being said, we are definitely our customers' most trusted partners because of our service level. I think if you go and do a study of the Indonesian paint market and when you visit all these building materials, you can ask them a few important questions. Number one, which company has the best service level? And closely tied to this, which company has the best product return policy? So these are two important questions when we look at how the progress of the company is going to be. And these two metrics is certainly critical when the market is experiencing a lot of turbulence. Because the last thing a retailer want to do is to buy and stock products from principals or suppliers, and therefore, these suppliers are not, are not responsible for any product returns. They don't want to help them out with any of the issues or the difficulties. So we're not like that. We're completely different, and we're trying to help them as much as we can. And yeah, for us to continue with our market share again, as I mentioned previously, we need to get it from our competitors. On the AXO timeline or milestone, as far as we know, currently the 4th of September is the deadline for the non-binding offer. We cannot share anything more than that. And in terms of the acquisition, yes, it will be a direct acquisition by the listco. So we're not thinking of any other structure. And so it's definitely done by the listco. AkzoNobel's market share and revenue trend. Yeah, I think somebody asked this and I forgot to answer. Based on our internal estimation, AkzoNobel holds between 7 to 8% market share. I think all of their products are in the water-based. As far as I know, they do not have any solvent-based products. But revenue trend in the past 3 years, I don't think they've been doing well, maybe in the past decade. And that could be one of the reasons why they decide to actually, sell the business in Indonesia as well as Southeast Asia. I think Indonesia, the Southeast Asia business for AkzoNobel has not been a focus for them. And the contribution obviously is in the single digit. And therefore, I think if you can see from the Akzo and Axalta merger, they would prefer to focus on other segments and other countries that they feel that they have a lot more dominance on. And Southeast Asia, as well as Indonesia, is certainly not one of those countries. Thank you.
Thank you, Pak, for the answers. Next question coming from Axel Bramantio again. Is there still room for growth in waterproofing segment as the largest revenue contributor, or is the segment already saturated?
Yeah, very good question, Axel. In fact, we believe that we're still at the beginning phase of the waterproofing. I believe that if we look into the 3 main segments, waterproofing, wall paints, and then wood and metal, the CAGR for growth would still be highest in waterproofing. I'm talking about the entire market as a whole. So I think waterproofing is one thing that is interesting, Axel. If you open our presentation, let's go back 2 years ago, you can see that under waterproofing, you will only see a few products. But look where we are now. We continue to increase our product offering within the waterproofing, and we're definitely leveraging on the strength of our brand, which is called No Drop. And more and more products are being added. We're still not done in this segment, obviously. So we believe that waterproofing is still far from being saturated. And in fact, the growth will continue to be very strong in this segment. Thank you.
Thank you, Pak. Next question coming from Hyun Jun Yang. Just a quick clarification on the AkzoNobel process. We had previously gathered that they were looking for a single regional buyer. Now that you have confirmed your participation in the local bidding, does this confirm that they are open to country-by-country sales, safely limiting your exposure to just the assets you want?
Yeah, so there was certainly a lot of noise, the fact that they wanted to actually sell the entire Southeast Asia, including Indonesia, as one parcel. But since then, they've decided to actually lump it into 2 parcels. The first one is Indonesia, and the other parcel is Southeast Asia ex-Indonesia. Now, why is this happening? I don't know if many of you know. So AkzoNobel owns 100% of the Southeast Asia business. But in Indonesia, they have a minority shareholder which holds 45% of the business. So I think if you understand that, I think it's logical to understand to know that why does Akzo decide to actually offer these 2 parcels? It's because of the local minority shareholder who obviously want to have the best value because of his only stake in the Indonesia business, but not in the entirety Southeast Asia. So I think this is how things are being sold at the moment from Akzo's side. Thank you.
Thank you, Pak. So next question from Dava Iksandi again. With the recent development involving Oriental Yuhang and Aquaproof, how do you see the Indonesian waterproofing market evolving going forward? Are there any strategic initiatives that Avian is considering to strengthen and sustain its position in this segment?
Yeah, so I didn't want to mention any names earlier, Dava, but since you're bringing it up, so this is one of the deals that I heard is actually not going through. Again, I don't know who's right, who's wrong. But look, I think, as I mentioned earlier, right, Chinese players are trying to enter Indonesia. But let's look at it from this point of view, right? Asian Paints is one of the largest paint company. I think they're ranked either number 8 or number 9 or so in the world. And after spending about 8 years or so in Indonesia, they decided to actually no longer participate. If you look at the source of unsuccessfulness for Asian paints in Indonesia, it all goes back to the fact that you just simply cannot gain market shares from relying from third-party distribution centers. I think when you look into our Q3 results, you will see that the number of independent DCs that we have will drop by a bit. You can see that we're now at 36 third-party distribution center. In Q3, that number will become 32. So when we look at why are we decreasing the number of third-party distribution center, but we are increasing of the wholly owned distribution center? Well, simple. Wholly owned DC, which is owned by us, okay, are essentially 100% aligned when it comes to what's more important. Is it sales or profit? But when you look at third-party distribution center, it's always profit. They don't even care about sales. If they can do very little sales but make the most profit, that's in fact what they will do. The other behavior of third-party distribution center is that they can only sell products which are already in demand, which is why for Asian Paints, for instance, when they were here and they appointed so many third-party independent distributors, they did not succeed because their products was not in demand. Now, in the case of Oriental Yuhong with Aquaproof, obviously then it's slightly different. Aquaproof is a brand that people of the Indonesian consumer are quite familiar. However, No Drop has become the #1 waterproofing product in Indonesia maybe 7-8 years ago, based on our internal estimates. And if you go outside of the greater Jakarta area, you don't actually find too many Aquaproof products. So again, when Oriental Yuhong, if they are successful in acquiring 55%, I think, shares of Aquaproof, I think they will also face the same issues. They are going to start maybe not from zero, but they're going to start from a low base where consumers no longer sell Aquaproof because they have switched to No Drop. And at the same time, if you continue to rely on third-party independent distributor, your path will not be as smooth as ours because you don't have alignment with them. Thank you. Any strategic initiatives? We're not doing any strategic initiatives at this point in time, Dafa. However, we're looking at product portfolio that we have not currently entered into within the waterproofing segment. And that's something that we continue to do in order to strengthen our position in the segment. Thank you.
Next question coming from Calvin Kurniawan. Congrats on the strong results, but some question from my side. Number 1, on capital allocation, seeing the free float is nearing 15%, which may limit notably buyback size, are there any plans to increase dividend payout ratio? And how does the M&A change on this? Number 2, when cost input of this magnitude is, does Avia eventually plan to adjust down the ESP? Number 3, what was the reason for the lower one-day delivery service fulfillment rate?
Okay, Hadi, take the first one.
Yeah, thank you, Pak Calvin. So on the capital allocation, I think our capital allocation approach is always focused on maximizing long-term return for our shareholders. This includes dividend distribution, while we have to ensure that we retain sufficient flexibility to pursue other value accretive opportunities, such as potential acquisition that could generate the long-term benefit for shareholders. Yeah, hopefully it's answer your question, Pak.
Number 2, when cost input of this magnitude is, do we have any plan to adjust down ASP? So in my 26 years of working for the business, Calvin, we have not done adjustment from our ASP. So prices have only continued to go up, but never down. Now, What happens then as our profit margin continue to expand and so are our competitors? Well, what will happen is that the below the line spending will increase. I think it's logical to assume that if we have extra ammunitions and our competitors also have extra ammunitions, that we'll all start to do promotion, more and more promotions. But in terms of ASP being adjusted down, that has never happened and will never happen, Calvin. On the third, very good catch, Calvin. I was also wondering why was our one-day delivery service fulfillment dropped. So this actually has a lot to do with the fact of our last bite, Calvin. So let me explain. It's a bit technical, but normally, if you look, forever, whenever we have a last bite moment, it's always 1 month. However, in April and May, because of the craziness of the input costs as well as input shortages, we decided to only give very short last bite periods instead. In the month of April, the last bite only happened for 6 days instead of 1 month. In the month of May, the last bite only happened for 10 days. So why is that impacting the one-day delivery service? Yes, because as you can imagine, within that very short period of time frame, we received so many orders coming from our customers, and therefore we were not able to actually deliver everything on the next day. So that's basically the reason why our one-day delivery service dropped to 83%. So the good news is, Calvin, in the month of July, it's gone up to 88%. So, because things are normalized and we don't have any, immediate rush for our products, and things are normalizing. The aim is always trying to do even better than 90%, Calvin. Thank you.
Thank you, Pak, for the explanation. Next question coming from Cheryl Lee. May we have an update on the progress of the Cirebon plan, please?
Yes, thank you, Cheryl. So the Cirebon plant started initial commissioning in the mid-June 2026. So during the past 2 months, July and August, we have been gradually ramping up production. And currently we are operating at around 20% from the first phase plant capacity. So our current focus is on the production of water-based paint and given the existing capacity constraint. So we will continue to increase production gradually while improving efficiency and ensure stable operation. So we expect to progressively increase the capacity until next year. Thank you.
Thank you, Pak. Do we have any other questions? Oh. Another question coming from Theodorus Melvin. Hi, management. Congratulations for the solid results. Just want to follow up on the actionable details. Following your explanation on the actionable, number 1, is actionable Indonesia is being offered from the actionable only 55% shares or 100% shares, including the local partner? Number 2, are you aiming to buy only one parcel Indo asset only or both, including Southeast Asia asset?
Yeah, thanks, Melvin, for the question. So the first one, the actionable Indonesia is being offered for 100%. So it's entirety. Even the minority shareholders have agreed to sell. So if we are able to secure this asset, then we'll own 100%. The second one, are we aiming to buy Indo only or both, including Southeast Asia? We are aiming only to acquire the Indo business, because the way we see it is at 26% market share. If you add Axos, let's say 7%, right? We're looking at 33%. There's still a long way to go in terms of being dominating in the Indonesian market, right? If you look at other local paint manufacturers, whether that's TOA in Thailand or even Pacific Paint in Philippines, so they basically hold at least 40 to 50% market share, or even Asian Paints in India. So because of the long runway that we still have in Indonesia, we do not want to be distracted and trying to do too much and participate in the Southeast Asia, because we do not have any experience And so I think that's how we see it. The focus on Indonesia remains our only focus for this M&A. Thank you.
Thank you, Pak. Is there any other questions? Oh, another question from Justian Rama. Actionable acquisition means market consolidation. Do you think this will translate to further ASP increase in the market? On the other hand, do you see any risk of dumping from Chinese players like what we see in ceramic tile sector in the past?
Yeah, thank you, Justin. So given the fact that AkzoNobel only play in the premium as well as the mid-tier segment, and the prices that they have now is currently quite competitive. I don't think if there is that much room for price hikes anymore, unless the input costs continue to go up, then we'll make price adjustments. But if not, then I think prices for AkzoNobel product will just be more or less the same. Risk dumping from Chinese players, like what you see on ceramic tiles. So again, this is where the paint industry is completely different than ceramic tiles or even cement industries. When you make a decision to buy cement or even ceramic tiles, you don't necessarily ask for the brand. You just choose the pattern that you want for ceramic tiles, and then if you find the pattern that you want for your house, and then you would buy that pattern. Who makes it doesn't really matter that much. That's completely different in paint, Justin, because when it comes to paint, the fact that Indonesia is not solely dominated by the cheapest of paint basically means that they look at the brand of the products. So when you want to paint your product, this is why the Akzo asset in Indonesia is very important, because AkzoNobel have been in Indonesia for more than 65 years. I mean, my grandfather was selling that in his shop, when he started in the early 70s. So, Akzo product has the best top of mind when it comes to the premium products. And that's why to us, the synergy is huge, because we, as you know, are not very strong in the premium segment. So the moment we have Akzo, then obviously we'll be very strong in all segments, including mass market, including economy market, including the premium market. But risk dumping on the paint is really not a strategy that will work. If you make your products cheaper, it just basically means that you're down trading, and then your competitor is going to be a different level again, because people don't see cheap products in paint as a good product. And that's why the market of ceramic tile and paint are completely different. So we're not threatened at all by any price dumping. Thank you.
Thank you, Pak. So another question coming from Avinash Bhaskar. Can you give an update on how the adoption of Mitra apps is? How is the redemption pattern, and has there been enthusiasm from the painters for the same?
Very good question, Avinash. So at this point in time, we have two apps. The first one is for painter, and the second one is for our customers, the retail shops. Early next year, we will combine these two apps into one. So they'll just be called Avian brands. And then the system will be able to identify if you're a retailer or if you're a painter, then you'll see the respective menus. So if we now talk about the painters program, which is a loyalty that we started to do more than 5 years ago. In fact, up till now, we're still the only paint company in Indonesia with coupons inside their products, which are basically meant to be for end consumers' loyalty, right? So you'd be surprised to know that the app actually has been downloaded more than 1 million times. So we have more than 1 million downloads, and out of which maybe 70% are painters. But not all painters decide to download, because if they don't have smartphones, then the only way for them to redeem their coupons is by exchanging it at the shops. Now, the enthusiasm from the painters continue to go up, because once you realize that the coupon that you found in the paint can actually translate to money, and the fact that they have no expiry date. So if you find just a few of them, you just put it in your pocket. If you go back to a shop the following week, then you can redeem everything all at once. If you don't want to redeem, you can continue to put it in your pocket. So I think we also see, when it comes to claim rate and everything else, it has been continuing to develop very, very nicely. And I think to us, this is very important, because, we know that if we just focus on our retailers, right? Competitors can always give more promotions, more discount to our retailers, and therefore they would be, okay, well, let me have a look and try this product. But the behavior is completely different than when you're able to influence and create loyalty from your end consumers, namely the painters. Because any of our competitors, if they want to copy this loyalty program, they will need more than 5 years. As you know, they would need to recycle the entire inventory at the factory, at the DC, as well as at the retail outlets. And that will take more than 5 years to do. In the first 3 years that we did this loyalty program for painters, we did not see any traction whatsoever. It was very, very, very slow. But now the traction is progressing very, very nicely. In fact, we're very happy with where things are going. And we're very happy at the redemption rate of the app from the painters. And we have started to conduct gathering for these painters by looking at the number of points that they have. So we invite them, we have events, and then, we will do more of this in the future. We just did a trial at 2 locations, and I think it was received very well. And we give them gifts, and we give them recognition, and then, so that their peers know, like, who has the most points and so on. But this is an app that took us a long time to get to where we are now, and that's something that we will continue going forward. Thank you.
Thank you, Pak. Is there any other questions?
Okay.
I think we have enough answer for all the questions. If you have any other questions that have not been answered, please do not hesitate to reach out. I will coordinate with the management and get back to you as soon as possible. Once again, we appreciate your participation in our Q2 2026 earnings call today, and look forward to seeing you again in the next earnings call. Take care.
care.
Bye-bye.
Bye.
Thank you.
Thank you, everyone.
Bye-bye.
Bye-bye.
Thank you.